Thanks everyone for coming. I know a lot of people are on vacation still and the summer has started, so I appreciate that you've made the effort. I think this is going to be an amazing panel from what Pierre's been telling me. We've got some incredible panellists here and also Pierre has proved himself to be an incredible moderator. So I'm going to hand it over to Pierre and he can introduce the panellists. Thank you.
Great. So first of all, thank you very much for coming tonight. My excitement over this panel was that I've known all of these speakers and I've also heard their perspectives on a lot of these things and felt that they were very fluent. It wasn't a group you really had to prepare for. They all have very definite opinions about the various topics we're going to talk about. And so I was really excited to have them on, and frankly, I don't know what they're going to say. I'm just assuming that it'll be entertaining or at least very realistic. And hopefully you'll get some additional perspectives for your own coming out of this. So with that, I think I want to start by level setting the group and just getting about a 5-minute summary of when you got into cryptocurrencies and started working broadly in the blockchain ecosystem.
Sure. So the last thing
and I'm sorry, let's start with your name just so we make sure everybody knows it. But,
and
yes, and the mic.
Hello?
Yeah.
Perfect.
My name is Lily. I'm the CFO of 21. Some of you may have heard about it if you've been in the Bitcoin blockchain space for a bit longer. Basically, we give you a public paid inbox, so you can actually get paid to read your email and do other tasks. And then, so that's for you as an individual. For businesses, we basically aggregate folks into lists so that whether you're doing sales, recruiting, market research, it's a much more efficient way of contacting people out of your network. So anyways, I got into Bitcoin in 2013 when I was in China. So I was previously building hospitals in China. So we built a 500-bed hospital outside of Shanghai. It was a little bit like living in the 1960s because for every hour you leave Shanghai or Beijing is basically going back 10 years in time. And Shanghai and Beijing are like the 1990s, right? So basically it was the 1960s. And I did that for a number of years and it was very interesting, learned a lot. But I didn't want to live in the 1960s anymore. And then I sort of started learning about this Bitcoin stuff from Bobby Lee, who I used to play poker with in Shanghai for whatever other reasons. And he started talking to me about this Bitcoin stuff. And so I thought there was all that press, and I thought, is this just internet drug money? Is this a big scam? It was like the sort of Liberty, like the Liberty Bank or something, and right, Liberty Reserve. And I thought, wow, this is amazing, right? Like this is fascinating. I should learn about this. And so I got into it. I read the white paper, and I didn't fully understand it the first time around, but I was convinced that there was something legitimate about it. So then that's how I got into Bitcoin. Yeah, that's right. And I started to peel off the different layers, and I got really interested in it. And whether it's from the more philosophical perspective of it, it's just a lot of things that sort of keep me interested in the space, and here we are. So.
Hi everybody, my name is Vaughan. I'm the founder of Tierion. Tierion is a software company, and I think of what we're building as a dial tone for trust for the internet. So our software allows you to, software developers can link data to the Bitcoin blockchain or the Ethereum blockchain and generate a proof of its integrity and existence. So every type of company that you heard of that says we want to put X on the blockchain, chances are they really want to link things to the blockchain, not actually put them into the blockchain itself. And we have a really good technology and engine for doing that. I got involved in Bitcoin. I heard about Bitcoin pretty early on. Like most people, I didn't really pay that much attention. What really caught my eye was in 2012. So there's two major vendors of graphics cards, NVIDIA and AMD, or ATI now. And back then, I noticed that AMD graphics cards were usually competitively priced with NVIDIA graphics cards, but now they were going up like 20, 30, 40, 50% price premium. I'm like, why the hell are these graphics cards so much more expensive? Like, who the hell is buying all these graphics cards? And it was because people had figured out how to use GPUs for Bitcoin mining. And that was like, whoa, wait a second. So that really caught my attention. And at the time, I was making marketing automation software, and I ran a performance-based marketing company. And we always had a problem with our customers where we had to report numbers to them and they had to report numbers to us, and our compensation was based on being able to verify the accuracy and timeliness of all that reported data. And so we had this idea to take SmartNet, our marketing automation software, and add this little feature to it that was creating a timestamp proof by linking the data to the blockchain. And it turned out that that idea was a lot bigger than being able to just add a feature to our software. And plus, you know, me and my co-founder have been working together for 19 years, and we just wanted to do something different.
You look like you're 19.
I'll be 40 in August.
You said it.
So, but we wanted to do something different. So I was involved early on in some of the other ICOs. The first storage ICO, I designed the first product for Factum and helped them launch their company and their crowd sale. The second storage ICO, I was involved in that. And then also an advisor to Blockchain Capital, which is right down here in the Ferry building. They were the first venture capital group to raise money from a token sale. So they raised a $50 million fund a couple of weeks ago. 40 of it was with a traditional LP structure, and another 10 of it was with a token. So that kind of, you know, I've known Pierre for a while, and certainly known Tim and Vinny for a long time, and I just met Lily at the Token Summit. So that's kind of my story and how I got here.
Cool. Thanks. So,
should I just point them to the Unchained podcast? You want to learn about Vinny? Go to the Unchained podcast.
Yeah.
This man has been on a junket, media junket lately, so it's great to have him here.
so my name's Vinny. I founded. It's not working.
Here, pass it.
Yeah. Hello. Okay, cool. So I started a company called Gift in 2012. Which we're trying to do digitalization of gift cards, put them onto mobile devices. Instead of carrying 20 gift cards in your purse or handbag, it could be on a phone. And the inspiration for that was I was at Starbucks in 2011, and I was able to use the Starbucks card in your phone. I was like, this is pretty cool. And I wanted to do it for all the other companies, and that's how I got into the payments world. And once you get into the payments world, you get stuck realizing how much payment fraud there is, and then you realize, well, hey, Bitcoin can solve this. So I was sitting chatting to a friend, an advisor of the company one day, and saying, we have all these chargebacks, and one chargeback is equal to the margin for the next 50 sales. So it was a really tough business to be in. And he said, well, you should look at Bitcoin. I'm like, yeah, that's just like this thing that these Chinese miners go and mine. Like, it's not real, right? Because that's what I thought when I first saw Bitcoin come out, which unfortunately, I was playing World of Warcraft, and I was like, well, in Warcraft, all the Chinese miners get all the thorium anyway, so what's the point? So I never bothered trying to mine the stuff. But long story short is we plugged Bitcoin into Gift, and it took off like gangbusters, and eventually became the biggest Bitcoin site. I think it probably still is today. When I left the company, we were doing 8 figures in Bitcoin sales. On any given, on the biggest days of the year, we would be 5% of the entire blockchain just a transaction going through. So it was pretty big. And then I left. I wanted to do something else in Bitcoin because it just did well, and sold the company to First Data. And so I looked at identity on the blockchain, and the more interesting part for us was voting. So how can we use blockchains to secure voting networks all around the world and allow you to not have a situation where there can be a president that's not representative of the country, like in South Africa, for example. Because I'm from South Africa, I wouldn't use any other country as an example. So, how do you get people to vote without intimidation? Because that's a big problem in Africa. So in Africa, literally, people get intimidated, they have to go stand in long lines for sometimes 2 or 3 days, and these are people who can't afford to even take 1 day off work to vote. So democracy is a big issue. And so but everyone in South Africa has a phone, a mobile phone, like 48 million people with mobile phones. So if you could attach ID credentials to the device, secure it, and use the blockchain to confirm a transaction, and even using coins or tokens to cast votes, you could actually secure voting. Now, that's a very utopian 20-year view on things. The reality is it's not going to happen anytime soon because governments just don't trust technology. Governments are technophobes in general, and it's changing, but when we started talking to representatives from California State, from San Francisco, local governments, the biggest issue really is that, well, how do I know that that's you? So you need to come to town hall and make a vote. They don't want to believe that the person's not there. So we decided instead of, I literally had a whole business plan written for voting for the company. The company was called Civic, that was the name, and still the name. And we said, screw it. I didn't take it to a single VC. I had the whole thing done, we had designed, and we just threw it away, and we rewrote the whole plan that we would build an identity platform which one day could allow us to do voting. And that's what we started working on 2 years ago, and filed a whole bunch of patents and and built some really cool technology, and no one believed any of the stuff would be valuable because Bitcoin was dead 2 years ago. And we built the whole thing on Bitcoin again. And Bitcoin's dead, Vinny, what are you doing? And so anyway, I raised just under $6 million from, extract all my old investors from Gift because they made money and they were like, hey, this is cool, we'll go again, free roll. And we built the product, we launched it last week and it's working really well. It's taking off and people are excited about it. So we'll be in ICO next month and for 33 million, and it looks like we'll be well oversubscribed. So amazing.
I look forward to digging into the ICO side of this, so we have some questions to dig into that. Cool, thanks.
Hey guys, yeah, it's good to be here. Thanks again for organizing this. And yeah, I've had a chance to be on panels except for Lily. Good to see you again. Yeah, and I usually harass Wayne whenever I can. So
if I'm not wrong.
I get if that's not good. We were on the panel like 6 weeks ago. Yeah, arguing. So
you're on the orange. I'm in orange.
Yeah, in orange. Yeah, well,
because I was trolling you from the audience.
We were very simple. We just have a traveling circus. We just go around. Is there like an empty corporate building we could sit in? Yeah, genesis of where I kind of started with this. Like Lily, I was in China for about 5 years. The last stop I was there was in Shanghai. In 2012, a friend convinced me to actually look into Bitcoin more. I'd heard about it originally in 2010 on slash.org and ignored it. And started mining because I had free electricity. Back to your point with GPUs, I was mining with GPUs. My wife actually, funny story of when she first met me, she got really angry when I explained what these machines were doing because she actually designed those chips. She works at Intel now. That's actually why we live down here in San Jose. Long story short, she grudgingly let me have that hobby. I did sell everything before I moved back to the US, and I didn't become Bitcoin rich or anything like that, and I don't regret that either. And that's a whole other story. But the company I work for actually has nothing at all to do with cryptocurrencies. Instead, we kind of looked at some of the technology bits and reapplied it to the world of regulated financial institutions. We have roughly 80 members. They're all large banks or regulators. We're working with several central banks, including MAS in Singapore, HKMA, Bank of Canada, and various others globally. And we just closed a pretty large funding round last week. So
that's like $107 million.
Yeah. Well, wait until our ICO, right? Yeah, then we raise like triple that. So I'm here just to be the counterbalance to everyone else, and vice versa.
And Tim, maybe you should add that so R3 blockchain inspired is the theme of the technology that you guys have, right?
Sure. So the genesis of this is. About 2.5 years ago, the founders that did this with us three, they ran a family office and they kept on getting pitched by companies out here. In fact, like Boost, they came up to New York in September 2014, and then they did another roundtable in December 2014, in which they were said, oh, all these cryptocurrency companies are going to destroy the world of finance. And David Rudder, our CEO, was like, hey, I'll invest in you guys. I understand finance. Love to get involved in that upside. And then when they looked into the actual business models, kind of these guys didn't even know that the entrepreneurs didn't know what a CSD or what central banks actually did. So the idea was, hey, how can we take some of this technology and actually reapply it to the world that these regulated financial institutions work in? So we're building a platform called Corda. It's unique in the sense that it only solves specific problems. We're not trying to solve problems that Bitcoin's trying to solve. In fact, we have a number of people on our, I'd say like half our staff are involved in some way with the cryptocurrency world as fans or traders or something like that. So I wouldn't say, even though I might be the most bearish skeptic in the room, it's not because I hate it, I just don't like the community. But that's a whole other conversation.
Awesome. So, last week there were two very seminal conferences in the space. One is called Consensus, much more of a corporate event. A lot of the professional companies like IBM and Ernst & Young, Deloitte, all of these companies presented blockchain technologies and how these might impact different industries. And it's a much more IT-centric view of the world. The following week was Token Summit, which was a very different conference, a conference much more current to what's going on, or the craziness we hear today about the ICO market and these tokens that are being released, and blockchains being used as a means of fundraising, and in some cases as a means of propelling the company's business models. So I thought it was interesting, since I know some of these folks attended, if they could give us a little contrast of what they saw in terms of the attitudes of people at the Consensus Conference and how that might have differed from the attitudes of people you saw at the Token Summit. Lily, were you there?
I was at both.
You were both, great. Yeah, so why don't we start with you again?
So the contrast between the two?
Yeah.
It's the same people.
Well, were they?
Venn diagram. Venn
Yeah,
diagram.
it was.
There was definitely
60% at least.
Well, but I heard you couldn't get in.
I did. I was speaking.
Okay, no, but there was a tweet that went out.
No,
that you
no,
weren't
no.
getting.
I took a photo of Ryan.
Oh, that's
So the funny thing is, the organizer of Consensus, the biggest conference of the year, was stuck outside the Token Summit conference. He couldn't get in. He had a ticket. Oversold.
Yeah, that's right. And also there are a number of people who are like legends in the space who couldn't get into either, right? So like a friend of ours, Chandler, is like the first miner in China.
There we go.
Yeah,
He couldn't get in.
he was turned away from the folks at Token Summit while sort of like the suits and the bankers are sitting in there sort of enjoying their cocktails, which for me
So you use that as a derogatory term. So why don't you give us a sense of what happened?
Well,
Suits of bankers.
Damn bankers.
We're in law office right now. Be careful.
I mean, I say that lovingly because I used to work in private equity consulting myself, and so I guess it's a little bit nostalgic for me. You could say it that way. But I thought I think it's a very good thing, actually, that for those of us who've been in the space for a while, it's sort of gone from being this corner of a lot of sort of utopian thinking, and blockchain is going to do all these wonderful, great things, and now there's actual use cases and businesses that are being built around that, and so that sort of gets into the mainstream, and I actually see that as being a very, very positive thing. Although, people in crypto sometimes like to keep it a little bit more of the niche sort of province of our sort of, our cool corner of the world, but I actually think it's very good that it's that people in traditional industries are really starting to see the value, integrating into their businesses, and it's become very hot for all of the reasons that we originally got into it because we saw the potential in it. So I think that's very, very good. I will say at Token Summit, I didn't recognize about 90% of the people there, right? Yeah, less. I recognize very, very few people there, so it's also potentially an indicator of a lot of the sort of frothiness to come, right? What I also found was interesting is I actually ran into an alum of, so I used to work at KKR, and for one of like the early partners at KKR, who is now investing in this space, probably one of the first, because he's pretty entrepreneurial himself, and it's interesting to sort of contrast that viewpoint of someone who's a very, very seasoned, very professional investor, and the lens he sort of takes on investing and how he's thinking about the crypto world. So that was just also interesting to see sort of the melding of those perspectives. And I think there's quite a bit of, maybe education to be done between the mainstream investment world and the crypto world, because people started struggling. Do we think about ICOs as stocks, right? Do we think about it as a currency, as a commodity? Where does this fit into the traditional framework?
Cool.
So
I was at both events. I spoke at Consensus. My company, Tierion, along with 19 other companies, including Civic, announced something called the Decentralized Identity Foundation. So these are companies like Microsoft, IBM, RSA, interesting startups like Civic, Blockstack, Tierion, and a couple others. And the idea is that there's a lot of activity around identity, and we formed 3 working groups and are going to be contributing some open source technology into this blockchain identity space. The most interesting thing to me about Consensus was that the price of Bitcoin was between $2,500 and $2,800, and nobody really talked about it that much. Compared to previous years, it was a bigger conference, and there was much less emphasis on the price of Bitcoin. By contrast to the Token Summit, I haven't seen anything like the Token Summit really since the very early .com days, back in like '96. There was a tremendous amount of excitement. A lot of my friends who are there, who are also founders, either had just completed ICOs. For example, a company called Storage. It's kind of like Dropbox, but not one company, just all over the internet. They had just raised $30 million. Brendan Eich was there, who completed a $33 million ICO this morning for Brave. 35, sorry. It's probably 40 now.
33 is our number.
33 is Vinny's number. I didn't want to steal your number.
I believe it was 35.6. I looked at this one.
Yes. 156,250 Ethereum they raised in about 34 seconds.
That's such a...
I know. It was all arranged for beforehand.
You'll get your
Well,
turn, and yours will not take 34
Yes.
seconds. It'll take 45.
It went to
No, purposely won't.
193 people participated in that ICO for Brave. But the interesting thing that I saw at the Token Summit, there's a lot of energy. There are a lot of people in the investment community who've taken money out of their traditional funds or formed special purpose vehicles or other hedge fund-like vehicles who have just capital that they're just moving into this space. So they're buying a little bit of every token that's out there that's already trading. They're buying a little bit of all of these new ICOs, especially for promising companies like Vinny's that are, past the seed stage, have a product, have customers, which was very different than a few years ago. I mean, I can remember a time where, I'm not going to name names, but I can remember sitting in an office and seeing people come in and drop off envelopes of cash just before the day that the token sale went live. This was an undisclosed activity that people were, pre-purchasing things at a discount over what was going on in public. So
You can name names, it's okay.
I'm not going to name names. Everybody who knows me knows who I'm talking about.
Sounds like Brock.
No, it's not Brock.
You know this is being live casted.
I'm totally joking. I'm invested in BCAP.
It's not Brock.
Oh, he's backing up. We're invested in this fund.
Yeah, invested in Civic. I'm just joking.
But it's become much more professionalized. At the event, I sat behind Albert Wenger from Union Square Ventures for a little while. He was extremely enthusiastic. It was just written all over his face. He was clapping. He was going in a seat like this. He was a very happy guy, and he had a lot of energy. And Fred Wilson from Union Square Ventures, Andreessen Horowitz also invested in a company called Polychain Capital. They put $10 million, I believe, total into a hedge fund that's investing in these startups. So it's a very different world than it was just a few years ago, and that was really the biggest takeaway that I had from those two events.
Let's change the topic. People didn't attend the conference, only hear about how wonderful the conference was.
So maybe let's touch on two things. So the Consensus Conference was more of what I would term a blockchain type conference, where people were talking about solutions around blockchains. Mm-hmm. When we moved to Token Summit, it's a very specific use case scenario, right? We're talking less about the notion that there's a blockchain underlying it, and more about this notion of tokens for fundraising or for business models. So as you think through these things, is the future of this world one of one or the other, or are we going to see advancements in both? Is this something that this blockchain revolution really will be? It's going to happen in these ways on this side and those ways on that side? I mean, Vinny, I think in your case, Civic is actually playing on both sides of that. You use a blockchain for your service. You're raising a token, a fundraise using tokens. So you're playing, and your business model is leveraging the use of tokens in it. So can you talk through those kind of disparate world of blockchains for us?
So we're not doing a fundraise.
Sorry, a token sale.
Token sale.
Sorry, I always mess up on that.
No, there is a difference. I mean, a fundraise would
Tim, don't roll your eyes.
the reason it's not a fundraise, the fundraise would
be illegal.
No. So you've got to understand, like, what's happening right now is people have got to think about equity structures different from network structures, okay? If you create a network effect, like, if you create Bitcoin, you put it out there, the community owns it, well, you can't acquire it. There's no upside there. Like, there's no Visa, MasterCard, they can't go buy Bitcoin. It's like 16 million tokens out there or coins out there at whatever price. Even if they could, if one person holds out, you don't own the network, right? So it's different. It's a different type of thing. It's like, maybe it's undefined, but like it's a network, right? So when you do a fundraise, you're giving away equity. So we've done fundraising, we've raised funds, we have equity shareholders. Those people are shareholders in the company. When the company makes a profit, they get a share of it. They have no value in they have no ownership in the network per se. If the network price rises, if the company owns some of the network, then that's part of the balance sheet. But that's about it. So there's no direct correlation between the two from a sort of shareholding perspective. It's two different things. And I think we've struggled because we use old paradigms to try to understand what is now the new normal, right? In the case of Civic, we're creating a network, and we're making it owned by the community. And we'll take a share of that network, and we'll cultivate it and build it up, and we'll make it more valuable over time so that everyone in the network benefits, because we're primarily would be the biggest holder. We're keeping 1/3 of the tokens, but 2/3 are sitting with the community. And so we're saying, can we do this together? Can we build an identity network where we can change the way the world functions. And so if that's the case, then if it was a fundraise, it would be a different structure because the network, the value that one person, so the whole point, I mean, think about it this way, if Facebook had a separate, if Facebook was a network-owned business, in the sense that the first 1 million people at Facebook, first 1 million users, got some value out of it, that would be awesome, right? If you're part of the first 1 million people doing Facebook, you kickstarted the network, you got nothing out of it. In fact, you got less than nothing because your information is being sold and you're being monetized, right? But think about it this way, if you could build networks where the people who are the catalysts for growth, they're the ones who benefit from the network being bigger over time, it changes the dynamic of how you look at these things.
And maybe it changes the way it gets kickstarted.
Right.
Because ultimately, once it gets to a certain size, the latecomers are probably not going to see the benefits that the early comers did. Right?
Absolutely.
So, that first 1,000 is a good number.
But saying Bitcoin today, like buying the Bitcoin right now versus being one of the guys who got in at 20 cents, it's a very different game.
Definitely.
I mean, the main thing that I see is that, and the main takeaway that I get from all of this token activity is tokens accelerate network effects. You allow people who participate in some sort of network. In the case of Vinny, it's verifying the identity of things. In our case, it's verifying that some data is provably accurate and has an accurate timestamp. The ability to have a token incentivizes people to build out a network and participate in that network. It's kind of like if the first couple people who were Starbucks customers got Starbucks gift cards with 10,000 Starbucks points on them. But back then, Starbucks drinks were really expensive. But over time, the price per point, the drink price per point would go down. And so the value of that would go up, or the utility of that would go up over time. And they could incentivize other people to participate in the network, and they would get those kind of benefits. So that's really what we're seeing with these new models, is that you don't necessarily need a cryptocurrency to do this. There's always been customer loyalty models. There's always been other types of affiliate marketing models. But there is something, I think, fundamentally different about the way that this is working right now in terms of people's attitude and the ability to have a liquid platform that's open. There's a standard on Ethereum called ERC20, which means that you can create, anybody can easily create a token, and there's a way for that token to be tradable. And those types of things have just lowered the barriers to entry for this type of activity. And so I think we're going to see a lot of experimentation. There's certainly a lot of capital ready to flow into this space. The regulators will show up eventually, and we'll see what that looks like. But there's a tremendous amount of energy around this, and there's also a lot of people who have maybe a little butthurt about this, a little bit of hurt feelings.
Well, no,
I'd be happy to challenge everything.
and
No doubt.
I'm just a messenger, man. A nemesis of sorts of Tim's, Krista Rose, wrote an open letter to the SEC today about all the crazy, and I helped him a little bit with the letter, although I don't agree with all of his positions on everything, about what's happening in the space. And there's some truth to what he wrote. And so there's a very big divide about people's attitudes. But the thing that's very clear to me is that the money's there, it's moving into the space, this is the direction that the world is going, and at least for the short term, we're going to see a lot of activity here, and on all sides, on the entrepreneurial side, and on the regulatory and the financial side as well.
So let me...
But can I just add to what I'm saying here? One thing which is very clear is that this is a new type of model which needs new rules. You can't sort of take the old rules and apply them. You've got to figure out how to shape it for the future. We've got to future-proof, because I think the problem is, so I mean, if I just take an example of Singapore and Switzerland. So Singapore is becoming very, very progressive about how they address digital tokens, digital assets, and how these ICOs are done. So all that happens is if tomorrow the SEC came down and said, stop, everything, what happens? Civic packs up, we move to Singapore, where we could do it, and we would launch it under the rules and regulations that are there, because at least they've got it defined. And that would happen to a lot of other companies. So what happens is you wind up pushing out all the good companies that are trying to do good in the world and build the next generation of technology to countries that have actually been progressive in how they address, what we're trying to do is we're trying to protect the innocent, make sure like the bad actors stay out. But there are a lot of ICO scams that are going to be happening already, started happening. We're just not sure which ones are the scams yet, because
they don't know.
They haven't collapsed yet. But like, It's going to happen, okay? There's going to be, so let's not make a mistake. There'll be failures and there'll be scams.
Right.
And so right now, it's just murky. We can't tell the difference between the two. Like, we could fail as a company.
Right.
We could fail to produce network effects. We could fail. Were we a scam? No.
But you could be.
We could be, but we're not. Like, and the reason I can say this is because if you look at, the team, the track record, the current investors, the board, it's not the type of guys who are going to go and, scam people. Unknown team, white paper,
2 years, 2 years until.
No network, no connection, like you don't know who these guys are, it's a very different world versus known entities who have been here for a long time. And it doesn't have to be in Silicon Valley, but like literally I've seen white papers and teams where they're not even on LinkedIn. There's no like profile on LinkedIn. Like,
Super stealth.
yeah. So exactly. They argue that they're in stealth mode and the math stands up for themselves. And then you look at the math and I'm like, oh, I can't understand this math. It's like PhD math. Okay. Well then, do I just buy it because I'm going to get FOMO because I don't understand the math?
So Tim, R3 just raised $107 million, traditional equity raise. A lot of it came from its banking customers. The biggest ICOs we've seen to date, not on valuation basis, but on funds raised, tokens sold, is in the 30 to 40 million. Actually, we just talked about
Global goes to over 50.
50, all right, so 50. So would this have been a model that an R3 could have explored as a way of raising money and not giving up any equity?
So, just to be clear, these are my own opinions, not the
These are completely your own opinions.
So I would say no. I think we would have lost credibility with our customers, and we wouldn't have had alignment with some of the problems with these ICOs, or actually all the problems with ICOs, is you end up with hundreds or thousands of retail investors that aren't aligned with your goals, aside from just getting the token price to raise. They don't care ultimately about the utility of the platform. If we're going to talk empirically, by the way, raise your hand, who's an attorney in this room? Any attorneys? Great. You guys are going to have lots of billable hours with this community. Everyone's going to need you guys in 6 months when they realize that the regulators do pay attention to this stuff. So, ultimately, if you look empirically at the platforms that did ICOs in 2013, 2014, 2015, at any point in time, you try to measure them based on the promises that they said, almost none of them have fulfilled the utility that they promised or advertised. And yet the prices of these coins have gone up significantly. There's a complete disconnect between the utility of what's on the platform versus the speculative euphoria around the animal spirits of the community. And that could continue as long as you have retail investors who are just unwise. And so to give you an example, I went to Consensus last week, and it was basically the joke I made is every 2 minutes, if somebody hadn't mentioned the word ICO, you were very lucky, because everyone was just ecstatic, and you could just throw your money everywhere. But we had a members event that following day for all our consortium members, and I gave a small presentation, a 15-minute presentation about explaining the backstory to all this stuff. And I left to go get some food at the buffet, to come back in to listen to the rest of the panel. And the AV guy, the guy in the background handling our microphones, came up to me as I was getting this fish on my dish. He said, "Tim, I just put $100 into Bitcoin and Ethereum. Tell me, how much more should I put in there?" And I was like, that shouldn't be the takeaway at all of anything I think. So, and then I get messages on LinkedIn for me wanting to be for people asking me to be an advisor, just like Vinny or anyone else on stage, offering me like $50,000 to just put my face on a slide deck. I get people messaging me on WhatsApp saying, "Hey Tim, can you help me?" I don't recognize the number. So we're at a stage in which you have a bunch of people that are unsavvy, unsophisticated, and have no business whatsoever being involved in this, getting involved. They're going to get hurt. So even if we use euphemisms like token sales, at some point, regulators are going to catch on to the wink-wink that's taking place and say, "Hey, you know what, there is some type of actual, if it's not a security, it's going to be considered a commodity, or there's going to be some regulatory framework." And I don't think it's fair to say the regulators are anti-technology about it. We could easily do this with a database. It's solely...
But which regulators? Are you talking about American regulators? No, be specific though.
I would say that a great deal of regulators globally are paying attention to all this stuff.
That's not true.
You could say it. We could do a
that's
straw.
not true. Like if you look at regulators in Switzerland, and Switzerland basically they put the Tesla's one on hold right now.
Let me explain how many ICOs work. They create two structures: a non-profit entity and a for-profit entity.
Not all ICOs, we didn't.
And what ends up happening is these non-profit entities many of them get registered in two domiciles, only two. Singapore because there's no capital gains tax, and Switzerland because of various MMEs managed to lobby the government to look past and turn a blind eye to some of this stuff. ultimately, if all we end up doing is moving these entities to physically to it, it really doesn't matter, because at the end of the day, the amount of self-dealing and insider trading that's taking place between the for-profit and the non-profit, it just stinks of massive collusion. And savvy, there's not enough savvy retail investors to call them out on this. In fact, if you look at many of these nonprofits, they sign 10-year exclusive contracts with the for-profit that's run by the same exact people that run the nonprofit. So, and it's not just one or two or three. I wrote a whole 50-page paper internally for our staff to understand what's taking place. I can't give it to you, unfortunately, but I'm happy to talk to you offline about this. So I think that there's going to be a lot of people that are hurt, maybe not today, but 6, 12 months from now when the market actually declines and we actually get to see who the actual scams were from the ones that were actually just trying to do something accidentally.
So he's actually right about a lot of those things. That's exactly how the scammers do it. So how do the non-scammers do it is we keep a Delaware C Corp. We're selling tokens, so we're recognizing it as revenue. We're paying our taxes in the US to the IRS for revenue earned, so it's income taxes. We don't have an offshore structure. We don't have a non-profit in Bahamas. And, I mean, like we spoke to the tax guys, Caymans and wherever else. We spoke to the tax guys. They all recommended this stuff. We just said no. We said as a company, we're going to take this position, and we're not trying to do a scam. And so the company owns the tokens, and we're a Delaware C Corp. And so we've taken the moral high ground on this. Very few other companies are actually doing that. So this is one of the things I look at. When you look at these ICOs and token sales, where's the money going and how's it being spent and what's the governance structure around the company? With us, we have a well-known VC, Gary Bennett, who's sold his company, Des.com, to Salesforce. He's our board member. He represents investors. We've got a great selection of VCs. We're treating this as income. It's an asset on the balance sheet. There's a lockup. Founders are not trading at all. So myself and my co-founder are not allowed to buy or sell any of these tokens while we're working on the company. We don't have any in our possession. It all sits under the company, the OAC Corp. So we've dealt with all these issues, and our terms of sale are coming out soon. But this is all dealt with, and we've taken the moral high ground on how we do it, and we are still arguing that we're selling software access tokens. And that's what it is. And we're recognizing as revenue paying taxes on it. So it's kind of hard then to say, well, it's the other thing if we're doing it. And we have, Perkins Coie, our counsel, so they've taken us through all these steps, and we're the ones who have to make the decisions, because we could have taken a lot of other companies and say, well, if you can save the money, go this route. We said, well, let's just do it the right way. And so I think it's hard to sort of say everyone's like that. They definitely are the scammers, but there are companies, and especially the sophisticated entrepreneurs who've been on the block a few times, that do not want to get into trouble doing this.
But, sorry, and what is the token then?
Bitcoin.
Oh, the token. So no, it's a smart contracting system.
But is it a share or is it what it is?
It's like an API key.
Yeah, it's a key. Basically,
It's an API key.
Exactly.
There's also another end of the spectrum. So with blockchain capital, they actually issued a security as a token in a fully regulatory compliant manner, which is like the opposite of the spectrum, but still compliant for what Vinny is doing. And so again, $10 million was raised, and the advantage or the pitch that the guys at Blockchain Capital give is that it provides liquidity to early stage investors who haven't had liquidity. Typically, if you're an LP in a VC fund, your money's tied up 5-7 years before you can see any sort of return. And this way, there's a way of having some liquidity to be able to sell that and be able to do other things with that investment.
Well, but to be fair, in the case of Blockchain Capital, this is what's actually very interesting about what's happening in this space as it relates to what I would term a spectrum of financing options. That there was a time where you raised early stage financing, you raised a seed round from angels, and it was a priced round, even at that stage. And then the introduction of convertible notes came in fairly quickly, and that became a loan with a promise to give equity in the future when a professional valuation came in. Then we moved to this thing that Y Combinator started with the safes. And the safes took the loan part out. And so it was a promise to give equity at a certain price, but there was no loan mechanism. When I start to look at blockchain capital, they actually require the investors in the US to be accredited, which is a higher barrier than just anybody being able to buy. Outside the US, there weren't these laws, so I think the EU, you had to hold for 4 months. The US investors also have to sell their entire position in a year. When they exit, after a year, they must exit their entire position. So that first group of investors can't just piecemeal out their holdings, they have to clear the whole book. Now, Americans can buy at that point, but and they can trade, but that's after the first year. So they really did go, what I would say, the extra mile to stay very closely aligned to what's happening. But the notion of the token is what starts to make it interesting, because now you can move it a little faster. And I think we'll see what regulators have to say. I think, Tim, your point is right. The regulators are looking to figure this out. And to your point, Vinny, they haven't figured it out yet. It's got to be different, you know. So, you know, when it comes to 21, now you guys are not necessarily playing so much in that world, but I could imagine with your new model using tokens as a means of doing the payouts to, you know, in other words, introducing tokens as a business model into what you're doing, right?
Well, I think that it's interesting for any sort of network-based business, right? To essentially have it's kind of like a tokenized loyalty program in a manner of speaking, where exactly you reward people for sort of being early in the network and contributing and stimulating that sort of, you know, stickiness, right? And in a way, sort of loyalty programs for frequent flyer miles, hotel points are very, very motivating for some people, or you might be surprised. Like I used to work in consulting, and these are very highly educated people, and the amount of time and energy they put into staying in starboard hotels, I mean, my God, right? And that's where you have a central bank where they dilute value of your miles, of your points every so often, but even then, I mean, there's this massive ecosystem around it. So I've seen that one firsthand, and sort of you can harness that power and and add so many additional sort of very attractive features to it, where the price of those, imagine your start points would increase over time. I mean, gosh, this would really get nuts, right? And so that's essentially what I think can potentially happen, which is extremely exciting. For us right now, you know, if we're paying people out, and part of our sort of values, we're paying you, you know, money which is convertible today, right? We're not paying you in dollars or, you know, or RMB or, you know, or pounds or whatever it might be, because wherever you are, we want to be able to pay you, so we use Bitcoin. And so I think there is value in that being, you know, convertible and recognized currency today, right? So if we were going to pay people out exclusively in tokens, I don't know whether that would resonate very well with people, because that would not necessarily be seen as sort of a credible source of compensation. But it could be interesting.
Well, you'd have to make them. You'd have to make it.
You'd have to complement, right? You'd have to complement. You know, right now, the Bitcoin has enough sort of value to people that they're willing to basically do work in exchange for Bitcoin. And so in the future, if people were willing to do work in exchange for a 21 token, then, you know, it's possible. Yeah.
Well, and I think that's the premise of many of these new utility-based business models, which are saying, hey, we want to jumpstart that network, and these people are willing to get paid in this currency that can be exchanged into others.
Yeah, right? That's right. So you could imagine number of businesses actually having multiple forms of compensation. And so similarly, you know, with United Airlines, there's transactions in miles as well as in dollars, and so you could see that system pop up for a number of different businesses.
If the reason to create a token is to solve the payments problem, then that's not a good reason.
Yeah.
Right.
But if there are other reasons, then, I mean, I've seen, so my favorite is actually Filecoin, which is coming out on the market soon. I was an early investor, one of the first, I think, 4 or 5 investors 3 years ago in Filecoin, and they've done a really good job of building up the protocol to where it is today, and they'll probably be the biggest, I think they'll be the biggest, you know, ICO token sale of the year. They're using part of the AngelList, they created a coins list, it'll be all regulated, and it's going to be great. And so I'm looking forward to that, but that's a good reason to have a coin, the way they're doing it, the way you'll be able to share drive space, and etc. So if it's just payment settlement, just use Bitcoin. I don't see a reason why you should do anything else.
You know, you were an investor, you actually were at Shark Tank, and you invested in a company that has a token called Gollum. What's the company's name?
Augmentos.
I'm sorry. What's the name of the company?
Augmentos.
Augmentos. Oh, and what is their token?
Databits.
And what is it? Give us a sense of what they were trying to accomplish with that.
So I've said for many years that one of the best use cases for tokens is, well, obviously scarcity. And if so I'm on Shark Tank South Africa, the TV show. So I did the first Bitcoin deal out of any of the Shark Tank sort of network worldwide, which is great. I'm not sure anyone else has done one.
I was going to say, were there other?
And so I met these 2 young kids, and they were trying to do it's a really awesome sort of VR game. It's kind of like Pokemon Go meets, I don't know, World of Warcraft. So you have this like a foe, and these characters can fight each other, and you're fighting as friends. And they were trying to do this weird they're all managing the gathering place. They have this whole like card mentality thing. So they have this like card they're going to sell and distribute. And I said, guys, what are you trying to do? And they would eventually through the whole what you see on TV is 15 minutes. It was like an hour and a half or 2 hour discussion. And so what they try to do, they're trying to create scarcity. They say, well, you're trying to create scarcity, issue a token, and let it be tradable, and issue these characters on the token so people can do it. And I was one of the early guys who bought into Spells of Genesis, which is the bit crystals. And so I saw what they had done, and we basically used that model for Augmentals. And I mean, the tokens are 20x because of the way they've done it. But there's a specific use case. There's only so many god creatures, I think 50 god creatures in the entire universe. So those creatures are trading at like thousands of dollars each, because if kids want to play it, they have to buy a god creature. There's only 50, and now it's digitally certified to be unique. They can't print more of these god creatures because it's on the blockchain. And so this is powerful. And so I invested in the company, and Databits are trading at like over $1 right now, and we issue them at 5 cents. But that's because of the more popular the game, and they're going to alpha this week, so the more popular the game gets. Can you imagine if like this goes to millions of people around the world, and now there's only 50 god creatures? Like those things are going to sell for like 50 grand a piece.
Which actually is interesting that you bring that up, the scarcity issue, because the ERC20 tokens are Ethereum based. Mm-hmm. The price of Ethereum has taken off. Mm-hmm. And it starts to feel like a lot of that has to do with the fact that all of these token offerings are based on Ethereum. Yeah. And you kind of need Ether in order to buy into them, right?
But the transaction cost is going up now.
Right.
So now it's becoming prohibitive, just the way Bitcoin
but
is.
in Ethereum as well.
Yeah.
But to Pierre's point, he's absolutely right. So there are capital inflows going into Ethereum because people are putting US dollars into Ethereum and then using the Ethereum to purchase things like Brave and Civic and other things.
Yeah, like currencies around the world.
Yeah, I mean, fiat, US dollars here and there. But
global view.
Global view. Praise blockchain Jesus. But it
oh yes, there's a cult.
Oh yeah. Find the Bitcoiner and ask him about the Coin Dojo. See what he says. But yeah, it absolutely has, and also with Bitcoin as well. I mean, Bitcoin received a price boost back in the day from people, putting money into Bitcoin to buy Ethereum, to buy Factom, to buy BitShares, to buy all these historical tokens. So this is we've actually gone through like 3 or 4 of these token-esque cycles.
But there is a little difference, and this is where I'm always stuck a little bit with Ethereum. In the case of Bitcoin, we know there's a theoretical limit that's going to be reached of the number of tokens that will be released. Hence, an implicit.
No, it's not a theoretical limit. It's a real limit.
Well, no. It's only the reason I say theoretical is because if we see a fork, then we're going to have 2 coins, and there will be double the amount, right? So it's a theoretical limit right now till we see what happens with the fork.
I agree. But Ethereum is
not
theoretical.
Right, Ethereum is theoretically unlimited. And so, again, if I play from the side of Bitcoin, I think, well, there is this limit, and so everything's happening within this limit. In Ethereum world, there really isn't a limit. So what is creating scarcity in that world?
But think about NASDAQ. NASDAQ doesn't have a limited number of shares that they can issue to all of the companies in existence. And I think people look at Ethereum in the same way. I'm not advocating for this, I'm just reporting the facts here. People look at Ethereum and say the more applications that run on Ethereum, the more assets that are issued on Ethereum, the better it is for the Ethereum ecosystem. Bitcoin also has a second layer protocol called Counterparty that allows you to issue assets. With segregated witness and some of the new technology that's coming out, there's going to be new sets of assets and new types of things that are going to be issued on top of Bitcoin. And so I don't
Bitcoin 2.
Or Bitcoin 2 or
Wayne
Chain
aren't you
or whatever.
Rootstock?
Rootstock?
Rootstock's different.
But the point I'm trying to make is that if you look at Bitcoin as a base layer, adding things on top of Bitcoin could increase the value of all the economic activity in the Bitcoin ecosystem. The same is true for Ethereum. So it doesn't have to be we don't have to live in a universe where only digital gold exists, and every transaction that we do is a transfer of digital gold.
Got it. So I guess right now it'd be great if you have some questions. Happy to entertain those. Otherwise, we can keep asking questions from me. So if anybody has some questions, it'd be great. See some hands up, and I'll point to you. Great. And let me get a mic, because I know that's the next little piece of this.
Hi, thank you. This is wonderful, by the way. Thanks for coming. Are any of you concerned about what happens when the regulators come in, and have you been in touch with regulators?
I'll take that question very quickly. Yes.
On both counts?
I have not personally been, well, I've talked to a lot of regulators at conferences like American Banker Conference and the Consensus Conference, but it's really more of them just exploring the space. I know everybody who's involved in these token sales and the folks at like Perkins Coie and Cooley, which are two law firms that are working with a lot of these companies, are concerned about this. So I believe like Cooley and Coinbase and maybe a few other companies are working on a token sale framework and working with regulators to be able to set something up. The same is true of Filecoin. IPFS, they did a partnership with Naval Ravikant, who famously has created AngelList, this thing called CoinList. So there is some gray area, as the lawyers would describe it in here. There are people who are trying to do things in a regulatory compliant manner, and I think that as we march forward, we're going to figure out what that is. There is a real possibility at some point the SEC or somebody comes in, at least in the US, and just stops the music, at least for a period of time. But the thing that's interesting about this, as Vinny alluded to before, is that this is a global phenomenon. There's hundreds of jurisdictions all over the globe, and these assets trade on public networks, and you can't shut down the internet. So there really is no easy answer here, but there's been a lot of scams and fraud and things like that in the past. The SEC, for example, there's a company called Paycoin, which guaranteed a floor of $20 per coin. They're either under investigation or actively prosecuting them. I'm not sure what stage that's at, but they're making an example of them, and I think you'll see other bad actors engaged in the future. But there are also people like Vinny who are trying to do this in a legitimate manner, and I think that the regulatory folks and the law firms will figure out a way to, provide some guidance to everybody.
Hi, so I think someone mentioned earlier there were only 189 buyers this morning for the BAT token launch, and as people who are coming together and launching their tokens, obviously there's people who believe in their system, the system that they're going to create, the ecosystem that they're trying to bring to the larger world. What are the concerns that team is going to have with their tokens locked up in so few hands, and what is the risk of speculators in this space, and how does that influence their ability to be successful?
Thanks. I actually published a tweet today about the fact that they call it crowd sale because lots of people are supposed to have it, not a few, right? And it's similar to democracy. It should be, the power should be in the hands of the many. So the way we look at this is one of the things we're not doing discounts. So I think discounting is bad.
Can you explain that just so everybody?
Yeah. So in the pre-sales, what happens is people come in, they want preferential pricing rates. So you can negotiate 50% discount or 30% discount, whatever it is, and the bigger your check size, the more the discount they'll give you. That ultimately affects the aftermarket. So when people are trying to trade these coins, so imagine someone buying it for a 50% discount before it goes on an exchange. The day it goes on exchange, it might trade at the same price or slightly above. You think there's no incentive for the guy to sell and double his money in a couple of days and take it out? So we just did away with discounts because we just didn't think it made any sense to offer discounts to anybody. Even our existing investors are sorry, no discounts.
And look, there's an analogy here with the real IPO markets where friends and family stock is commonplace. Right. And there's no lockup period on friends and family. There is on the employees, not on friends and family. So that risk exists even in that world.
Absolutely, and equally, we didn't give a lockup period. So you can sell, you can buy your coins, you can sell the next day. That's going to be fine with us because you're not getting any discounts. There's no real embedded value. We want the market to be liquid and we want the market to be true. Even a small discount actually has a big effect. And so the next thing we didn't do is we didn't put a cap in either. Sorry, we did put a cap, but we didn't try and increase the cap. I mean, we said 33 million. There's lots of reasons why we went to that number. But we could probably do 50 or 100, but we're not going to increase the cap. Because another good thing about having a cap is that latent demand that's not filled in the pre-order or the crowd sale won't flow into the aftermarkets. So in other words, if you're able to absorb all the market demand for a token now, that kills liquidity for people buying it now. So it's one of the things, it's a subtle issue, but I think it's a big issue. And some of these guys running token sales, they find that they've absorbed all the cash and no other buyers. So how do you get out afterwards?
Do another ICO.
Huh?
Do another ICO.
And then the third thing to your point is, how do you get this open to the crowd? So I can't talk about the model we're using, but we've come up with something very innovative and actually very different. No one else is doing it this way. That basically, I wouldn't say guarantees, but we're not going to sell it in 30 seconds. And hopefully it'll take a day to fill. But it's the reverse of what happens today, but it guarantees us that we still raise the full amount. So I think it's reasonably innovative, but I'm saving it for my blog post.
Just a small point. Some of the companies that are doing crowd sales or token sales now also have a continued issuance model, where if you participate in the network, you earn things on an ongoing basis, either for an activity or committing some resources. So even if people are not able to participate in the token sale, they can participate in the network, and that's another way of getting, sort of included.
Do you have any other questions?
Hi, my name is Heather. I'm quite interested in how blockchain technology and Bitcoin and other currencies built on blockchain might help give the world's poor, the unbanked of the world, access to financial systems. Thoughts on that?
That's what we're doing.
Do you think it's actually
Well, I can tell you, I'll give you an example. So, here we go. Thanks. So we've been working with IDEO Labs and through the Mosaic Lab project and Citibank actually, where there's a utility company I can't name, but the utility company, one of the issues they've got is how do people who are in sort of in areas where ID verification is tough because they live in just poor remote areas, how do they open up a bank account? And how does the bank give them an account and bank them, really? So the issue really is people taking in statements and saying, well, I live here, and there's no real credit history around it, there's nothing. They have a thin credit file, so they wind up becoming unbanked, they stay unbanked for a long time. So we're working with them to effectively facilitate that data exchange. So the utility company can't give the data straight to a bank, but they can give it to the user on their phone. We can certify the data is valid, and when that user goes and opens up an account at a bank, that we can basically attest and show that the chain hasn't been broken and the information hasn't been changed, and they can open up accounts. So there's an example where if you give users the ability to control their data, and they own it. So no information sits on our civic servers ever. We don't store information. It's all on your devices, but when you go somewhere and use that information, they're using the blockchain to validate it, and they can open up an account for you. And that changes the way, and that model can be replicated worldwide.
Sorry, I'm passing on. So also, so Tierion is also part of the same program with 5 other companies at IDEO. The focus of that program is around identity. So as Vinny said, getting an identity is sort of a precursor for having a bank account or financial inclusion. But also just in general, if you live in a country like Venezuela where the currency is being devalued, people are able to use Bitcoin for capital flight, for being able to store money outside of the banking system. And that's something that we're seeing, in many different markets. So that's another element of how financial inclusion is being increased by the use of this technology.
I'll challenge that. Hear me at that. Guys, come on.
Has potential.
And then board at 2000?
Yeah, okay. Look, if you've been to enough FinTech events, you hear everyone talk about financial inclusion. And I don't want to say you shouldn't try for bringing in and trying to provide actual financial services to people, but the bottom line is these networks, because of the way the mining and fee ecosystem works, you now have substantially high fees on the network to where it actually displaces a significant portion of, say, people in West Africa that earn maybe $2.50 a day. The network fee on Bitcoin, for example, is $2. So there goes their entire day's wage just to transfer it. And Ethereum now is up to $30, something like that. So this grand vision of banking all
that's not what I was talking about.
It's not gonna. So I'm not trying to not.
But hold on.
You're talking about identity.
In the example I gave there's no transaction cost.
Yeah.
Okay, well, if you're trying to link
I'm sorry, Tim, I can't tell you why not.
he's got some secret magic voodoo that he's not willing to disclose. I don't have an NDA with him yet, so maybe that's probably.
Still won't get it out.
But back to the identity bit, though, I think if you look at some of the challenges of putting any kind of public data and you're moving it across borders, like who knows what GDPR is?
Okay. So I'll just make it very clear. I'm going to preempt him here. If your information is stored on your device and you move it across borders, there's no violation of any laws. We've already checked our tags on this. And this is why when the blockchain, the hashes are stored on the blockchain and the nodes propagate worldwide, it's one-way hashes, there's no data there either. So you can actually make identity portable around the world as long as the user keeps on their devices. Sorry.
That was a valid interruption. So GDPR stands for General Data Protection Regulation. It's taking place in Europe, rolling out a year from now next May.
PTSD.
And yeah, there's a number of other set of regulations. Basically, it has to do with data custody, data property, data sovereignty. And so if you are planning to put any personally identifiable information, aside from the one asterisk version that he just described, you're probably violating some national law. So if you're interested in knowing...
Just use Civic rather.
Yeah, just use Civic. But I actually have a colleague who actually used it. I did pitch to you guys. So I'm happy, if you're interested in the regulatory side, happy to talk about that offline. That's all we spend a great deal of time on.
That's where the money goes. That's why he's $100 million.
Yeah, so I see it. So it's good questions, but happy to talk to you about that more detail.
Lily wanted to chime in, I think, on this.
So that's something that we're pretty excited about actually, because if you can pay anyone, which you can do with Bitcoin, then you can hire anyone, right? So what we're trying to do is try to enable anyone to sell a minute or two of your time. For all of us, it's probably most likely going to be in the form of an email, right? But for people in the developing world, a minute of their time is deployed in very different ways. And so, right now, probably the best example of that is Mechanical Turk, which we've all probably heard of. Been around for about 10 years, probably $1 billion business, but for Amazon, that's not worth investing all that much time and energy into. It's only $1 billion. But they have essentially armies of relatively unskilled labor, people working for $2 to $3 an hour. And if you actually look in their T's and C's and see how they pay people out, they predominantly pay people out in Amazon gift cards, with the exception of the US and in India, where they do bank account payouts, right? So that means you have a lot of people who work for $2 to $3 an hour, speak English. Where is that? Philippines, for example, who are paid in Amazon gift cards. So what do? They pool their Amazon gift cards. They'll buy an iPad from Amazon, the US, have it shipped to the Philippines, and then sell it locally for pesos and redistribute the pesos, right? So I would argue that Bitcoin's probably better than that. And digital currency is better than that. And I know there's a fee issue with Bitcoin and Ethereum with these networks that they're growing, they're scaling, trying to figure it out. But long term, digital currency is definitely a better answer for people with that sort of as being their life circumstances. And if you really think about it, if you wanted to hire someone so there's a number of micro work platforms out there, right? Actually, quite a number. So Upwork, right? Elance, Odesk, where you can find someone to do sort of a day or a couple of days, maybe even a week's worth of work. But you can't find anyone to do a minute of work for you, right? And a lot of work can actually be decomposed into truly micro tasks like that. But if you wanted to hire someone in Kenya, for example, to do 5 minutes of work for you, how in the world are you going to pay them, right? Maybe you only want to pay them 50 cents. It's not worth it to do PayPal or even Bitcoin right now. But programmatic, and if you wanted to pay 100 people to do 5 minutes of work for you, there's certainly no way you can do that, right?
What about ACH transfer?
For 50 cents to Kenya?
You're assuming they have a bank account, first of all.
Well, I'm assuming
right. You can't do, so I don't know.
ACH doesn't go to
ACH doesn't go to Kenya, and a Swift, if you do a Swift wire, depending on your bank, costs anywhere between $25 and $40, right?
You use like BitPay or something.
Yeah, so there's various, and then BitPesa also has some regulatory concerns in Africa, and folks are working through it in different economies. But sort of the longer term vision is if you can compensate those people immediately in digital currency, now you actually have true sort of a truly liquid global labor market, right? In a sense, and I actually think the greatest beneficiaries of that are people who primarily rely on their labor to sort of monetize to pay for their life, right? And that's predominantly in the developing world.
Cool. So first of all, I want to thank you to our panelists for being available and engaging in this conversation. They're all great people. And thank you all of you for coming and making this possible.